Where is the market heading next? Understanding these 3 secrets on daily buys got me from losing a lot of trades to becoming consistently profitable with payouts. In this video, I'm going to share the 3 secrets that will help you identify where the market is likely to go next. To do this, first I will guide you how to analyze the higher time frame. And after that, we're going to use the higher time frame analysis to frame a daily buys around that and actually take entries and make money. Especially the third secret will be a game changer, so make sure you stick around to the end. No time to waste, let's dive to the first secret. There are 3 secrets to daily buys, and 2 secrets can be found on the higher time frame and 1 can be found on the lower time frame. And you cannot use the lower time frame daily buys without using the 2 secrets from the higher time frame. So let's dive in. The first higher time frame secret, and that's gonna be daily and weekly highs and lows. Because a very important question you should ask yourself is price more likely to take previous day high or low? And price can do basically 4 things. It can take previous day high, previous day low. It can take both highs and lows, or it can take none, an inside bar. In an uptrend, price is more likely to take previous day high. In a downtrend, price is more likely to take previous day low. But keep in mind, it can go to all of these 4. And how you can use daily highs and lows is frame reversals around it. Look at how price closes over the high or low. So in this example, if you see price failing to displace over the high and low, so it doesn't close higher, it closes lower, then you can expect price to go lower. Same in the previous day low example. If it fails to close below this low, because it closes here, you can expect the next candle to go up. Now let's go to the charts to see this in real time. Here we're looking at the daily chart at Euro JPY. You can do this on every single Forex indices metal. You can do this on every asset class. And we're going to look at how price closes over the previous day high or low to determine what price probably going to do the next day. And this is not a 100% model, but it gives you a very nice direction on where price could possibly go. So let's start up here. We have this doji candle right here, and price comes to the high, daily high, but it fails to close over it. So the next day we expect price to take the previous day low, and it does right here. Well, we take the previous day low and we close below it. So the next day we anticipate price to take at least the daily low, and it does. It takes the low, but it fails to close lower than it. So the day after it, we expect price to take at least the high, and it does, and it closes over it. And here we are also in a daily bearish value gap. And from this point, we take the low and we close lower. So we take the low, we close lower than the low. So again here, same here, we have this daily low and we close lower than it. So we expect the next day to again take the previous day low, and we do. And then right here, we take the low, but we fail to displace over it. So the next day, we anticipate price to take the high. And again, an overlapping bearish value gap here in doji. So we take the low the next day, right here, but we fail to close below this low. So the next day, we anticipate price to come back to the high, and we do again. And we fail to close higher. So that means next day going lower and lower, and you can keep doing this. And again, not a 100% score, but using this little secret can give you a very nice direction if price is likely going to take previous day high or low. And not only can you use the daily highs and lows, you can also use the weekly highs and lows. And when price fails to displace over the weekly high or low, expect a reversal. So right here you have a weekly high and a weekly low. And on Monday, we take previous week's low, but we fail to displace over it. So then what you can expect is price to trade higher to previous week's high, but maybe there's also some imbalances right here you can use as a draw on liquidity. And that is shown right here. You can use the previous week's high and lows as a draw on liquidity. So here we have Tuesday and Wednesday. We set a high here, then we start displacing lower, creating a fair value gap. And at the start of the week, we trade into the fair value gap, and then we continuing lower towards the previous week's low as a draw on liquidity. So you can use the previous week highs and lows both as a draw on liquidity or a starting point of a potential reversal. And now let's take a look at how we can use those previous week's highs and lows on the chart. So we start up here. We take on Friday we set a high. And here on Monday, we take previous week's high, but we fail to close over it. So the next day, we anticipate a reversal. Well, where to? We have fair value gaps here, and we have a weekly low right here. You see price trades towards it. Another example, same chart. We create a daily bearish fair value gap here, Wednesday, Thursday, Friday. Then on Monday, in this bearish fair value gap, we take previous day high inside a key level and we start trading lower, where to? Previous week's low right here. Thursday, Friday. On this Friday, we have a massive rejection. So not expecting here for Monday to take previous week's low. So Here the previous week's low is not intact. So here on Monday, we displace higher, Tuesday, Wednesday, Thursday, Fridays is a weekly range. Then here on Monday, we trade back into this fair value gap, Tuesday as well. And then we use the weekly high from last week right here as a drawn liquidity to trade towards right here. And you can keep doing this. So daily and weekly highs and lows are very nice to use on the higher time frame to frame your buys around. And now secret number 2. And you've seen this in the liquidity videos as well. Price trades only to 2 things. And that is internal range liquidity and external range liquidity. And if you combine that with the previous weeks and previous days highs and lows, you are set on the higher time frame. So you can use the internal range liquidity, the imbalances, the fair value gaps, the gaps as a place to trade from internal to external, or you can use them as a place to trade towards. So the first secret, the old weekly and daily highs and lows are all examples of external range liquidity, old highs and lows. So they can use that external range liquidity to trade towards internal range liquidity. If you want to dive in deeper into this, how you can use this intraday, if you have a 1 hour array, you can use the 1 on 5 minutes. If you have a 4 hour array, an array is or external range liquidity or internal range liquidity. So for example, a 4 hour fair value gap and you want to trade it towards an old high, then you can use the 50-minute structure on the lower time frame to take an entry into that. Same for a daily weekly array, you can use a 1 hour structure. Bonus points, very important, follow the order flow. If you're bullish, try to frame as many longs as you can. If the higher time frame is bearish, try to frame as many shorts as you can. And trending move, the opposing arrays should fill. So if you go higher, you want premium arrays, bearish value gaps, bearish order blocks, all the highs to just fill, completely be ignored, and vice versa for shorts. And then secret number 2, and now we're diving to the lower time frame, because now you understand based on the daily and weekly how you can spot the next day candle. And if you know where the next day candle is probably headed to, then you can drop to a lower time frame to use the concept of open, high, low, close, or the power of 3 or AMD. And they all are very similar. If we're looking here at this up close candle, how this candle is formed, the structure is open right here, then we have the low right here, then we have the high, and then the close. So open, low, high, close. Similar for a bearish candle, we have the open, then we have the high, then we have the low, and then we have the close. So on a bearish candle, price is probably looking like this. And intraday, how you can use this is using the AMD, the power of 3. So if you, for example, expect a bullish candle to happen on a certain day, based on your higher time frame analysis from secret 1 and secret 2, then you can use the accumulation. So you want, for example, Asia to consolidate, you want London to trade lower to set that low of the day, and then you want London and the rest of this New York session to trade higher to make that daily candle. And bonus points here if that manipulation move is in a daily, 4 hour or weekly fair value gap. It's all based on that you're already expecting price to make a green or a red or black candle. And this of course vice versa for shorts. And now let's take a look at the charts to find some examples. So right here, we're looking at NASDAQ on the daily chart. And based on the secrets you now know, the first secret here, we took previous day low right here, but we failed to displace below it. So the next day we anticipate at least to hit the next day high. And the next day high is overlapping with a daily bearish fair value gap. And then comes secret 2, internal to external. Because ideally we are in a downtrend, we want the daily fair value gap to hold to trade lower. That's the whole thing about a downtrend. So then we expect this candle and of course the next day to go lower to create a bearish candle. So now let's drop to the lower time frame to find that open, high, low, close. So this on the lower time frame, open, high, low, close, to frame our daily bias. So here we're looking at that same piece of price action from the daily time frame. And remember, we're expecting a down close candle on the daily. So we want accumulation, manipulation, distribution. That's what we're aiming for when we are bearish. And we are bearish because we want a reaction from the daily bearish value gap. So here we have a Sunday high and we see some accumulation here, tight range. And then here during New York session, we sweep some liquidity up here and then start breaking down, breaking structure and also creating some fair value gap. So here's where lower time frame entries can take place right here. And we just expect price to go lower. So another fair value gap right here, see that holds and price slowly but steadily starts breaking lower. And that's what we expect. So it doesn't matter these lower time frame structures where we don't respect the exact fair value gaps, because on the daily, our secrets already played out. We knew, okay, open, high, low, close. So here you went from a daily time frame all the way to a 5-minute execution using these 3 concepts. And now let's take a look at another example. Using these 3 secrets, we took previous day high, but we failed to displace over it and likely to hit next day low first. And and that's overlapping with a daily bullish fair value gap right here. So now we expect a secret 2, internal to external, fair value gap to a high. So now using this knowledge, let's drop to the lower time frame to find a open, low, high, close entry. So we expect for the next day to open, low, high, close. So here we're looking at that exact same piece of price action on the lower time frame here on the 5 minutes. And here, not during London, but during Asia, we already tapped into this daily bullish fair value gap. So then during London here, we start displacing higher. And then you can wait for retracement, for example, this one, to take an entry to the highs. Fair value gap here, fair value gap here. One of these fair value gaps, you can take an entry. Let's say you want to take it in the first value gap, you want to go from internal to external for a simple 1 to 2, no fancy stuff. And you can let your price do its thing to go from internal to external. It's all again based on your 3 secrets. Previous days, highs and lows, 2 internal to external, and if you have those 2 secrets combined, then you can drop to a lower time frame to find your open, high, low, close, your power of 3, your AMD. And the first example, we looked at a New York AMD where we had the entry in New York, and this one is more of a London session entry because Asia already expanded. If you enjoyed this video, I'm sure you will enjoy the 2024 and 2025 mentorship here on this channel. And if I can ask you for a quick favor, I noticed only 20% of you watching this actually subscribe to the channel. So I want to ask you a small thing. If you like the value you receive on this channel and want to support me, the easiest and quickest way to do this is to hit the subscribe button. And my commitment to you is if you do that, I'll make sure every new video will be better than the previous one. Thanks for watching, and I'll see you in the next one.